Good morning from Orbex head offices and welcome to another Market Insights video with myself. Germany delivered very disappointing factory orders yesterday at minus 8.4% year on year, capping off Wednesday's gains from 112 upwards and suspending earlier hopes that the slowdown in Europe was bottoming out despite the data for the month of February. Now, coupled with ECB's pessimistic language on slow inflation, slow growth, and also persistent slowdown, Euro may remain under pressure in the medium term. While we wait for the monthly NFP, US and China come closer to a deal after China committed to own commitments on increased imports by 2025. Good for the trade war, but how is this shift in supply sources going to affect Aussie and Kiwi will remain a big question for the foreseeable future. Today is the Friday, the 5th of April, and we're expecting, of course, the markets to be quite quiet ahead of the NFP, unless if we see some pre-positioning. Don't forget, we're going live on NFP, and you can register and watch for free. I'm going to talk about Euro-dollar and also dollar-yen. Now, please note that any of the recommendations here do not constitute investment advice, and losses can exceed profits. Now, going to our charts, I'm going to start with Euro-dollar, the 4-hour chart. We're moving in a descending triangle, and it's very possible that after this rejection up here, which is the corrective wave 4, we're going to see prices finishing the impulse down around 1.1150 or maybe lower. So I personally, I'm seeing this as an impulse 3 wave down here, okay, and then we'll start seeing corrections to the upside. Now, in case, of course, this fails to move lower, and that will depend partially also on NFP, unless if, of course, the move happens before the NFP, we are going to see just a double wave here, and then prices will move higher. Maybe after another attempt to break below 112. Okay. Now on the MACD and RSI, I get 3 different signals that support the bullish bias, and we want to see now prices breaking above this previous level, which is around 112.50, which is also the level that prices attempted to break yesterday, but obviously that was a failed attempt, a weak attempt. Now we'll go quickly on the hourly chart. On the hourly chart, we see also some signals from the RSI and MACD, a bullish divergence and a heated divergence, both of them on the bullish side. We have made an attempt to break about 112.50, then came down for a correction, and now right here around 112.21, this is our bottom, okay, for the day to look at. Pulling the Fibonacci extension tells us that the next level to reach is 112.75, and the next one, which is also the golden extension, is around 113.25, which is also a very strong resistance level. Now, you will be able to see that the Bollinger Bands are very squeezed. We're expecting the markets to remain quiet. We might see a break before the NFP, but I don't think this is going to be higher than 112.50 or lower than 112.20. So we're looking at maybe 20-30 pips range ahead of the NFP. Now, when I go on dollar-yen quickly, the 4-hour chart, we talked about this, I think it was last week. We are finished an impulse wave here and we had a correction, but at the same time we're also looking at maybe going up for another bigger impulse wave around 113.50 or even higher to meet this the top ascending trend line of this channel. We talked about this ABCDE pattern, which was actually, it failed right here, okay, and prices did not move up just for that reason. They broke down for the correction of wave C, and from there they started moving up, and they are actually now moving within a ascending triangle, which is also supported by several signals from both the RSI and the MACD. Now, because we do see a bearish divergence on the MACD 4-hour on the histogram, I am a little bit bearish, not at the moment, but very soon we could see prices start reversing right at this level, a very strong resistance around 112 and a psychological level. Now, if that happened, okay, we'll be looking for prices to move all the way up here for the wave 5 and then see the correction down around 111, 110.50 or even lower. Now, if we go a little bit closer to see if there is any shorter term signs, we see that indeed we have some bearish signals here on the MACD. The RSI doesn't show anything, which means the market is a little bit mixed, of course, and that's a bit more strong as an evidence now, because we are not looking at any breakouts before the NFP. Despite that, though, we do see that there is a bit more of volatility if we're looking at the Bollinger Bands, and we do see the lower band also trending, sloping to the upside. Okay, that indicates that we might see a move up to around 112 psychological, and then prices start moving lower. Now, coincidentally, we have this first correction also giving us as the 112 as a confluence level. Okay, if you pull your Fibonacci extension from C to wave 1 and correction 2, you will find that the second extension is actually at the very same level. Thank you for being with us for another day. If you like our video, hit the like button, share the video. I would also recommend that you keep an eye on our blog as we cover the latest news. We'll publish trading ideas and we'll provide all the necessary tools to serve you responsibly.